Hey guys, how you doing? This is Gershon from Technical Option Traders Inc. Hope you guys are having a great day. So today was an interesting day in the markets, and let's get started and let's see what the markets hold for us, right? So looking at the S&P 500, this is a daily chart on it, and this was bear flag that it broke out of, and we can see it went to the supply zone, and now we can see there's a huge rejection by the sellers at this level, and now it's starting to come down. Now, if we break this down into a smaller time frame, you can see that S&P 500 had a gap to fill, and now this has a gap all the way up until 399. So these gaps can get filled, and which is why my bigger level or for the downside still remains right about here around 403. If it is going to break out of here, we can have a big move to the upside. But right now, we want to just concentrate on the smaller things and see what the market is telling us. And today, this rejection tells us something important, that the sellers want to continue to hold 395. And we can see previously this level was tested multiple times. And each time the buyers try to hold it, and finally sellers, which is right about here, when the selling pressure added on, these sellers really push the market lower. Right now, we can see there continues to be selling pressure around the 395 level. If this level is overtaken due to the speech by Jerome Powell in the coming days, and also the CPI data that's coming out, that remains to be seen. But however, the other interesting part to note is if we look at this big trend here, it's still bearish. There's nothing else to say about it. Just trade lightly, trade smart. Take your profits as you get them, and don't overtrade the market, right? So this breakdown, and now we're gonna have to wait and see. Is coming back to test this. If this holds and pushes back above 395, we can have this gap fill at 400. All right, that's the S&P 500. Let's look at the triple Qs. The triple Qs on a daily, it's an important chart to look at. This is the bear flag breakdown. It tried to go back and retest. Now this is an important level at 280. We'll see if it goes back to test it, but it doesn't look like it's even going to get that far. There's a lot of selling pressure that's involved right about here. And now what we want to see is an important part about triple Q is that they have some support between 260 and 255. That 5 points is very important, because if that breaks, we can easily push down to about 238, 240, which is a pre-COVID highs, and that's something important that will tell us. And triple Qs have taken the biggest hit out of all the indexes, right? So if we go into the smaller time frame, we can see the triple Qs, they have slightly come down. There is a slight gap here that could possibly be filled if we do get a rally to the upside. However, this purple zone that I have targeted, or my area of interest, this is something I want to pay attention to, because each time this area went to, price went to this area, huge selling pressure came in and pushed the market a lot lower. So we always want to focus on the micro and the macro aspect of trading, and understand that where our big levels are and where we can get huge opportunities. Right now, the triple Qs are in consolidation. We had a big move to the downside. Now we're getting some sort of bear market rally. We might get a consolidation depending on the news that comes out this week, right? Also, the month of January is an important month because we do have earnings, and also there's a January barometer that is used in trading as well. How January performs is a high possibility the year will go according to that. So there's a few things at play here, so we have to watch for them. Patience is a key term to use, and do not overtrade here. Looking at Dow Jones, a nice run here after this consolidation to the upside. But something that we want to pay attention to is the bigger levels up here, and we want to see if those levels break, right? Right now, looking at the bigger picture, this is still, this could be an inverted head and shoulder if we look at it this way, right? So if we were to go and say this is a head, that's another head, and we'll have to see where this finishes to be an inverted head and shoulder, right? This could be something that's coming up to play on a daily, where we could get a breakout to the upside. Now, there's multiple patterns that are forming here. We must continue to watch them. However, there's nothing bigger than price action, right? Price action will tell us the whole story. If I am going bearish on the Dow, I will go bearish below this. This is the 322 level. Okay, if I'm going to go bullish, I'm going to wait for the break of 345, and above that, it will be a nice play to the upside. Now, there's a lot of lags with the Dow. Dow does represent the economy, so we'll have to kind of keep an eye on Dow, and we'll see where it goes for now. But that's something important to tell us. Now, IWM, rejection here. This is a bear flag. It broke out of the bear flag to the upside, and now it can come back to test, and we'll see how it holds up over the coming days. So we can see the prevalent trend, which is the downtrend, holding up really, really well. On IWM, if it breaks below 170, we easily get to 160, 165. However, my big trade would come at the break of 165 down towards 155, right? If this breaks, we can really be in trouble here to the downside right about there, okay? So that's something that we want to continue to keep our eye on, and that's something interesting to note as well, right? So the next thing is the gold for us. The gold, I've been mentioning on the weekly time frame that this is a cup and handle pattern. It is breaking out of it, and now we have a small candle here. That's something to pay attention to. We want to see a pullback. We want to see the zone hold up, and we want to see prices go up. The reason why gold is going up, which is my analysis, is I believe a lot of G7 countries are quietly accumulating gold, and there could be various reasons for that, but there's a lot of accumulation that's happening in gold. I will continue to be bullish on gold, until this level, which is 146, is broken. Gold does make a lot of sense here to continue to push a lot higher. If you do follow gold and you like it, this could be a trade of the year. Okay, that's something that we do want to pay attention to, and we do not want to ignore. TLT, which is bonds. Bonds are interesting here. So this is the lowest that they've ever been in quite a period of time. Okay, so we're going all the way back to about 2010, 2011 time frame here. A huge breakdown in the bonds right now, and that's something that we want to continue to watch. A rally in bonds will be something interesting. But however, it could be coming if we do get a rally, and that's something we want to pay attention to. But right now, bonds are still hurt, and I personally think bonds could be a good buy. I do not recommend buying anything on my advice, but I think they're setting up because if interest rates are going to come down, and that's what everyone's expecting, then it only makes sense for bonds to go back up, right? The price of the bonds to go back up, right? So that's something that the logic that we have throwing around. So that's something that we'll continue to watch. Now, the other one that I really like is China, which is KWEB. KWEB, broke down out of this, tested a low. There's a lot of talk about, quantitative easing in China. However, Chinese stocks, they're interesting to watch, but they can make you a lot of money or they can lose you a lot of money, right? But if we look at KWEB, there was a time when KWEB consolidated for years before actually breaking out, right? So China is one of those things where the breakouts can be false breakouts, and they can make you sweat a lot of money. And that's something that I'm not interested in. But for a long-term play, I can see the appeal in owning KWEB here, and even just holding on to it and just watching what happens and what transpires in KWEB. That's something that you guys can consider. VIX, all right. So VIX is important. It was up today, and I've been talking about the saucer pattern and VIX. I did break down below this trend line, which is great. Now it's consolidating here, and it's holding up really well. And that's not a good thing for the market, right? It looks like VIX will eventually break soon. Okay, so that's something that we want to pay attention to and watch out for. If VIX does break out to the upside, that will be a big, big thing for us, and that's something we want to continue to monitor. And if VIX does break out above 25, it could be a big tell for us. Right now, I need VIX to drop below 14, so I'm confident that where market has priced in everything. There's a lot of talk about recession and all these different factors that we must consider. And the sectors. Let's talk about them. Semiconductors went up, jets, commodities, oil and gas, utilities, communications, right? So there's some sectors that were up and some were down, right? But what's interesting to know is look at semiconductors, right? Semiconductors are bouncing from a lower level. Jets are still bouncing from a lower level. Commodities are a different story, right? Commodities are looking like they're breaking down from the upside, right? So that's something that we want to continue to watch and not ignore. We'll see what happens over the coming days. So trade lightly, trade smart. I'll see you guys tomorrow.